please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, as we await the WPI figures, let's just quickly take stock of what's happening on Dalal Street right now. It's a negative day of trade. Benchmark indices are down close to about 0.6%, even as pharmaceutical names continue to provide support to our markets. So Sun Pharma, HCL Tech, Lupin, Cipla, so basically your defensive names are trading higher. Pressure is put on by a couple of the other heavyweights. So Infosys, which has gone ex-dividend, TCS in the IT pack, ICICI Bank is looking weak. Oil marketing companies under pressure, so IOC, HPCL too, showing you cuts of close to about 2% odd. In the oil and gas space, ONGC too has cracked close to about 1.5%. WPI May inflation has come in at 4.43%, slightly higher than the CNBC TV18 poll of 4.1%. May WPI inflation 4.43%. I think that's the only number that we have right now. Ekta, you want to come in?
Yes, I think this is actually quite a bad number if you compare it to the previous month, because the previous month we had the WPI data which came in at 3.18%. So it's a huge amount of hardening which has actually taken place in terms of the WPI data. So 4.4% is where it's coming at. What I would wait for is basically the core inflation data, because that is expected to harden for WPI as well. Remember, last month core inflation came in at around 3.19% versus 3.16%. So this month there are expectations that it could come above 4% as well. So based on what we are seeing, remember that there were commodity prices which really hardened on a month-on-month basis, impacting WPI, which is probably going to reflect in terms of the core inflation data as well. Tushar Arora of HDFC Bank joins in to discuss the data. Tushar, your first thoughts on the headline number which is coming at 4.4%?
I think it is higher than expected. Market shouldn't take it in a positive fashion, and I think CPI, it came in almost in line with expectations, but wholesale prices, we were at 4.1, 4.2. I think markets were also close to that level in terms of expectations. So this number is certainly above expectations, and it should not bode well for the bond markets, and I think it should boost the expectations for one more rate hike.
Okay, well, we are still waiting for the internals in terms of what the WPI could be. Yeah, we have the food inflation data, in fact, which has now come up towards 1.1%. I think 1.12% is where food inflation has come, and compare this to around just 0.6% in the previous month. So that was expected in terms of a hardening on a month-on-month basis. But Tushar, now food inflation, say from March, where it was just about a negative terrain, has jumped all the way to around 1%. So what's your sense in terms of, say, the trajectory for food inflation?
See, seasonally we are entering into a phase when food prices would start going up on a sequential basis. I think the added factor would be how the MSP policy of the government pans out, the impact of which we would start seeing maybe August, September onwards, when mandi prices starts adjusting to the new MSP policy. So seasonally the trajectory would be upwards for food in general. The upside pressure could come in because of the MSP, and that is the risk which we have to see and watch out.
Okay, primary articles inflation has come in at around 3.16%. Tushar, if you had to give an assessment in terms of what core could have been for WPI this month, what is your ballpark figure?
I think the number you mentioned, we could see a higher number by 20 to 30 basis points compared to the last month's reading. But more than core, I think the fuel category is also important. I think all three categories are going to show an uptick this month. Manufacturing could be still subdued, but the other two items, primary and fuel, could be contributing mostly for the uptick in headline number this month. So fuel, maybe if you can look into that number.
Okay, we're still waiting for the fuel inflation to come through, but the manufacturing product inflation has actually spiked up all the way to around 3.7% versus 3.1%. So there is a hardening which has taken place there as well. Overall, Tushar, what would you expect now? Because post the CPI data, does this sort of firm the stance that the RBI could act as soon as August in terms of another rate hike?
So RBI's estimated peak is 4.9% for the first half. I think with CPI we almost touched that peak with the recent number for May. June we could easily cross 5%. Our expectation is around 5.5% for the headline number. June is also unfavorable in terms of base for WPI as well. So both WPI and CPI should be going up from the current levels in June. For the CPI specifically, it could even breach the RBI's estimated range of 4.9%. So certainly I think rate hike is almost on the cards. Whether it is August or October, I think it would depend on how much clarity the RBI gets on the MSP policy. Because oil, they have factored in that the oil prices are going up. They have factored in the risk of core inflation. They changed the inflation estimate and increased it to 4.8%. Our estimate is for inflation is for 5%. So we have 20 basis points higher number for headline inflation, which I think RBI still needs to look into. And I think if they get clarity on the MSP policy, which is the major risk right now, I think they could go as early as August. But if they don't, then I think they would wait till I think October. But one rate hike is certainly on the cards this year.
Okay, well, that fuel and power inflation, in fact, has risen over 2% on a month-on-month basis. So, Tushar, that's the information that you wanted. If you can just give your comments with regards to that particular statistic, as well as what is the trajectory you might expect from the RBI here on.
So I think fuel this month onwards, including both on CPI and WPI, should have an upside pressure because of fuel and oil prices going up in general. The entire transportation cost could come under pressure going ahead and lead to higher inflation expectations in general. So this is a broader risk coming in from increase in oil prices, which is happening since the beginning of this year and has taken a rapid path in past 2 months or so. So fuel is a risk which we need to be cognizant about, and we have to be taking that into account into our inflationary expectations and equations going ahead. RBI is more or less doing that. What they are not doing at this stage is maybe food. The risk related to food is something which is out of their equation. Let's see how that pans out in the months to come.
Okay, all right, Tushar, we're going to leave it on that note. Thanks very much for joining in. So there is a hardening which has come in for the WPI May figure, much more than at least what the street had anticipated, to levels of around 4.4%, and the other statistics such as fuel and power as well as food price inflation, all of them and manufacturing have all seen an uptick. Back to you guys.
All right, Ekta, thank you very much for that. I think there has been a minor dip in the Nifty as we speak, so just close to about 10 odd points. Let's get the intraday chart up for you on the Nifty. I think post the inflation figure, there has been a minor nick, so at the low point of the day. And right now, pressure is coming in some of these NBFCs as perhaps the market start pricing in the real possibility of an August rate hike by the Reserve Bank of India. So Indiabulls Housing Finance, under pressure for the second day in a row, slipped close to about 2% from the top of the day. Get into a break then. On that note, on the other side, we will be joined by the management of Somani Ceramics. Abhishek Somani, the MD, joins in next. Welcome back. Everest Canto is under pressure, and Yash is joining us to tell us some exclusive details on this particular story. Yash?
Well, Reema, on serious allegations related to siphoning of funds, fraud, as well as violation of exchange regulations, what we're given to understand is the consortium of lenders of this company called Everest Canto have moved towards conducting a forensic audit in the balance sheet of the company. Essentially, what I am being given to understand from my sources is that about a month ago, the ex-CFO of the company as well as a whistleblower wrote a letter to SEBI, exchanges as well as the lenders of this particular company, intimating and informing them about financial irregularities in the balance sheet of the company. Post that letter, the lenders of this company met and gave their consent for a forensic audit as the allegations were very, very serious in nature, and after which we are also given to understand that each lender has received an internal approval when it comes to this particular forensic audit. What I'm given to understand is that the period for this forensic audit is going to be the preceding 2 years, which means FY17 and FY18.
Okay, all right. Yash, the street is taking note of the story that you're breaking because the stock has moved virtually to the low point of the day. Pull up the intraday chart. The stock has moved lower as we speak. But you mentioned certain irregularities. Tell us, do you have a sense of what that is?
Nigel, as I pointed out, there are serious financial irregularities, and these essentially are violation of every act which exists, at least on the face of it. Be it FEMA violations, be it RBI, be it SEBI, be it the exchange regulations. I will start with specific problems which have been pointed out by the ex-CFO as well as the whistleblower. First one, EKC Industry of Everest Kanto, he's mentioned that that subsidiary was sold to another buyer, a Chinese-based company, when the land on which this particular subsidiary was operating on was a leasehold land given by the Chinese government and hence was restricted to be sold. To execute this transaction, what the management did was sold 100% shareholding in this particular subsidiary to the Chinese buyer, along with which the land as an asset was also sold. Of course, this was a violation of the regulations in China, but again, back in India, despite it being a material transaction, a material sale, RBI or exchanges were not informed about this particular transaction for a period of 7 months. The second one was money borrowed from Exim Bank and again re-sanctioned in 2016 of approximately 30 crore for a non-operational subsidiary in China was being siphoned off to other subsidiaries, maybe in Middle East as well as other subsidiaries in China. The third one, again a Chinese subsidiary, Longyu Tianjin, was essentially formed illegally just for the purpose of siphoning of funds, and also what I'm given to understand that the establishment of this particular subsidiary was not informed to exchanges, was not informed to RBI. Coming to the next, and this is a strong allegation with respect to corporate governance in the company. The Internal Financial Control IFC as required by the Companies Act 2013 has been violated. All independent directors, women directors on the board have no knowledge about the company and they are just acting as a rubber stamp when it comes to the decisions which are taken in the board meeting. The last allegation which I'm given to understand is that the company has a factory allotted in the Kandla district of Gujarat. Now remember, this particular district is a SEZ zone and of course you get tax exemption when it comes to the imports when you make in this particular territory. But again, they come with certain export obligation. What I'm given to understand is that the company imports steel tubes which are essentially used to make cylinders, which is the main business of the company. But the exports which the company is showing is castor oil. What I'm given to understand is that the company has established a contract with a broker on behalf of the company. That broker is showing exports of castor oil and they are being paid a commission of about 2.5, 2.65%. Some very serious allegations pointed out by the ex-CFO of the company as well as the whistleblower. Of course, the lenders have decided to take a forensic audit and we'll have a clear picture once that really progresses going ahead.
Nosedive, the stock has taken, now down close to about 15% on allegations of fraud and siphoning off of money, 15% gone on the stock. Thanks, Yash, for bringing us all those exclusive details. Let's move on then. Somani Ceramics is the stock which is on our radar right now. This is after the Gujarat High Court has asked the Gujarat Pollution Control Board to stop Morbi's coal gasifiers. To discuss the impact of this, we're now joined by Abhishek Somani. Abhishek, afternoon. The High Court has banned coal-based gasifiers in the Morbi region, which is where your plant is operational. We know that coal is cheaper than gas as a fuel. So what impact will it have on Somani Ceramics? Will it impact your margins negatively? If yes, how much?
No, in fact, it's on the contrary. We are welcoming this decision because all our factories in Morbi, so we have 9 factories. We have one in Haryana, one near Ahmedabad, and about 7 of them in Morbi. And all of our factories are gas-based any which ways. So the coal is cheaper, but it used to become even more cheaper to produce on coal because the Morbi manufacturers were buying coal in cash and also doing 100% cash business when they were billing to their customers. So this, in fact, being banned, will have a huge impact on the environment and pollution would be controlled. But on the other hand, it will also restrict the cash transactions. There is no impact on us because like I said, we are already 100% gas-based. None of our manufacturing was coal-based. So in fact, we are really looking forward to the government implementing this in a big way and making sure that these industries shut down or convert from coal to gas. Once they do that, then obviously they come to level playing field. So it's a great move and we really are welcoming it.
Right. So, Mr. Somani, what you're telling us is that it has no impact whatsoever on your company because you have already shifted to gas and you're at 100% gas. But wanted to ask you, you're cheering the implementation. In the past as well, it was talked about this implementation. It never came about. This time around, you believe it's going to be implemented? Are there further steps that we need to look forward to?
Yes, so in the past also there's been issues, and there have been, various agencies, pollution board, etc., which affect it. But somehow the Motor Manufacturers Association tend to get away with the implementation by, means which cannot be discussed. But I hope this time with this order, they implement it in a much more stronger and more stricter way. Just a clarification from your previous statement, Somani plants were never on gas, never on coal. So it was not a question of for us shifting. We were always from inception on 100% gas utilization.
Okay. Abhishek, but you're saying this is positive for organized players like you all, because most of the unorganized players would be using coal-based fuel, right?
That's right. Not all of them, but a majority of them were using coal-based.
Okay. Any numbers to help us understand that what percentage of the market would be using coal as a fuel in your segment?
Yeah, so if we have about 850 manufacturers odd in the Morbi region, I would imagine about 60 to 70% of them were using coal gasifiers.
Okay, and what market share would they have? Or what percentage of the market did they occupy?
Similar. So out of 850 manufacturers, like I said, 60-70% were on coal. That's the market share.
Okay.
All right, and just a quick question, Mrs. Somani, just to understand from who are the gas manufacturers out there? I mean, sourcing from there, because that is likely to go up then going ahead.
Yeah, so in Gujarat, there are many suppliers. There's GAIL, there's BPCL, there's GSPCL. But in Morbi, I believe it's 100% GSPCL. At least all our plants are sourcing in Morbi from GSPCL.
All right. Since we have you, Mrs. Somani, just a final question. I remember you telling us that FY18 was a bit of an aberration. FY19, how are things looking? If you could give us a sense of what kind of growth number you're working with.
So obviously, it would be a better growth number in FY19.
Single digit?
Double digit for sure.
Double digit for
okay.
Sure. Okay.
But again, the e-way bill coming in, I think the government really needs to implement it, because with the e-way bill coming in also, the cash transactions and the tax evasion is an all-time high. So there seems to be absolutely zero vigilance from the government's part to implement GSE or e-way bill in the right form.
Okay. All right. Thanks so much, Mr. Somani, for taking time off, joining us and giving us all those details. Well, on that note, we'll slip into a short break. You come back, we'll tell you how to trade the Nifty. We'll have our tech experts with us. Stay with us.